The wall of worry may seem tough to climb, but it's important to keep your eyes on the prize. My next guest laser focused on yield levels as the main obstacle to the market's next leg up. Let's bring in economic strategist Hardika Singh. It's great to have you here, Hardika. Welcome to the program.
Thanks so much. Great to be here.
So, look, borrowing costs are heading higher. We know this. We've been watching the bond market. We've been watching these yields. When you see the 10-year at 4.7%, where do we go the rest of the year? I mean, this is kind of, there's some red flags that are out there right now for the bond market.
Yeah, absolutely. It's not just the rise, but it's the velocity of the increase as well that we've seen across the longer dated bonds. And rightly so. Treasury Secretary Scott Bessent has been really worried, and he has tried to step in to sort of do a proxy intervention. And the market's reaction to that suggests that they don't really buy it. They would rather have a permanent solution to these long-term problems of growing deficit, for example, or the war. But instead, what we're really getting right now is a Band-Aid on gunshot wounds, in a way. And even today, there's reports that he could be relying on the Treasury general accounts to fund this buyback operation, which is obviously going to be much more than $4 billion, it looks like now. But still, we haven't seen yields pull back enough to the point where markets saying, oh, that gives me a sign of relief. I'm not as worried about raising the debt even more here.
But then he said, he was asked about that, and he said something to the effect of, well, I haven't bought a bond, which was, I thought was like kind of a crazy answer, but that was his response. So he definitely pushed back on that. So it's interesting to see kind of what toolbox, moves he's going to use, not just with the Iranians, but also just really to shore up the bond market. And, you're saying that really the stock market has not fallen as much as it could. So you're actually surprised that we've held up the way that we have, considering all the geopolitical issues we're dealing with right now.
That's 100% right. And yes, I was a little spooked by his comment as well, because the market is always forward pricing. So we're discounting it back to the present. So obviously yields are going to move in reaction to that ahead of time. But in the stock market, for example, the indexes are off low single digits from their all-time highs. And I think taking a step back and looking at the 30,000 feet picture, yes, we've seen a lot of this diversified rally, sort of unravel. But at the end of the day, the index is still in good shape. We have seen small caps rally. They're still outperforming year to date. So is the equal weighted S&P 500. And I think that though yields may remain high in the near term, until the 10-year gets past the 5% mark, that's the key psychological level for me. Until it gets there, I'm not going to be so worried about it, because only then do we see valuations start to get hurt for the stock market, according to historical data.
Yeah, well, no, the 5% level is certainly where you're going to see the alarm bells go off. And even when you're getting closer to that on some days, it kind of gives you a little bit of a stomach ache. But, the other thing about the Treasury Secretary is, look, I mean, the markets and I think Americans and the U.S. economy want to see this situation figured out with Iran. Nobody wants to be in this long war. It's costly. Troops are at risk. So how do you see this playing out based on, what you heard from the Treasury Secretary today?
It surprised me. It was not an announcement that I was expecting, I'll say. But China, I think a lot of times this year, we haven't seen China step into the global oil markets like they should have, with the, supply issues going the way they have. And I think China has done a great job of cutting its exports, relying on its coal and the consumers pulling back on airfares, for example. But China, if it steps in because of the shadow banking being curtailed, or illicit financing coming under trouble, I think if China steps into global oil markets, we're going to see oil prices go higher from here. And that doesn't solve anything.
What do you mean if they step into the global oil market?
So
they're already buying, well, they're buying from Iran.
They're buying from Iran. That's the thing. But none of it is public, per se. None of it is official. It is being done by ghost tankers, shadow financing. They have a whole system set up. And I don't even know if it's the government supporting it or not. But Scott Bessent coming in and saying, hey, you got to stop this. We're going to come after you. There's a timeline, of course, but at the end of the day, it is going to drive oil prices higher, or threaten to anyway.
Well, it's not just the fact, I mean, again, when I first read this FT opinion piece by Bessent this morning, the Treasury Secretary, first thing I thought of was China. Many of us did. But then he talked about other countries. And Victoria Coates told me this morning, she said, look at Malaysia. There are other countries that are also participating in the support of the Iranians. And you're supporting terror, to be clear, if that is the case. But he wrote, they, whoever they is, turned a blind eye to seaborne fuel transfers and the illicit use of their banks, all while concealing the extent of their complicity. And I think he's also talking about some of their Middle East neighbors as well.
It looks like to be the case. And I thought it was, he didn't name any names. And I thought that was very, very sophisticated way to do it. And he's giving a timeline again. So I think that this is a sign that, hey, oil prices might go higher and we need to start building up our reserves a little bit more.
There you go. All right. Well, let's talk about Jackson Hole. End of the week on Friday, the symposium kicks off. And, you know, a lot of times Jackson Hole can make or break the market. I mean, there's a lot of headlines that are coming out. But we have Kevin Warsh now as the Federal Reserve Chairman, and he's different. He's the one that is saying we're going to pull back on the communication. I don't want to telegraph too much to the market, and I'm paraphrasing his kind of take on the way that he's going to handle the Fed. So how do you think he handles Friday when he's speaking in kind of a more casual environment? Maybe he'll be a little more open. Maybe he will not. What do you expect?
Unfortunately, I'm not expecting any big fireworks. And that's especially because he has reiterated multiple times that he's not going to give forward guidance. And I don't really expect a couple glasses of wine to change that outlook. I think the big thing for Warsh is to see if he comments on what Bessent is doing. Because if you think about it, again, Bessent's moves are directly interfering with his mandate, that is for the Fed to be independent, for the market to independently set the long-term yields, and the short-term yields are obviously more influenced by the Federal Reserve. But the long-term yields, he wants the market to just do their thing. And I think Bessent stepping in, buying it, or promising to buy it, as he said earlier, I think that interferes with that. If he comments on that, then it would set up a nice test of the federal independence that I would love to watch.
Interesting. All right, Hardika, it's great to have you on the program.
Thanks so much.
Absolutely. Come back. It's great to have you, and fascinating thoughts from you, definitely.
Thank you.